Good morning, everyone. Good morning to everyone joining us online. Good morning to my distinguished guests in the audience today. With me, I'm accompanied by the Regenesis shareholders, Dr. Marco Sharavanya, Dr. Penny Law. If you just pick up your hands and give a shout out to everyone. My name is Indrani Reddy. I serve Regenesis Education and its subsidiaries as Chief Operating Officer. And we're joined by many distinguished guests and the esteemed panelists that I will be introducing shortly as well. And online, we have some very eager students that span over our business qualifications from the School of Business, our School of Public Management, School of Finance, and Economic Study programs as well. So this morning is truly an exciting moment as we come together to reflect on the economic landscape and explore the future of South Africa through a crucial lens, the budget speech. As many of you are aware, the budget speech this year was postponed due to heated debates surrounding VAT changes driven by key political parties. These discussions have come to a central to the budget's content and its reception across the country. Now, the VAT issue has become quite a flashpoint, with some political parties strongly opposing any increase in VAT, arguing that it would disproportionately burden the poorest members of a society, and with unemployment rates at such historic highs and many South Africans struggling with rising costs of living, these parties argue that the tax burden should instead fall on higher earners and corporations who can afford to contribute to national coffers. On the other side, we have government and certain pro-business parties contend that the increasing VAT is essential to ensuring financial stability, reducing the budget deficit, and preventing the country's already high levels of debt from becoming unsustainable. In his speech, the finance minister acknowledged these concerns and made it clear that any additional VAT would be used to fund essential services like healthcare, education, and infrastructure, critical areas for our long-term growth. So how do we balance fiscal responsibility with social equity? And these are broader issues that has been central to the budget speech. With mounting pressure, both domestic economic challenges and global geopolitical shifts, including policies from the Trump administration, these are serious questions about how the budget will support South Africa in navigating its economic challenges. Will the budget's proposed measures, including its stance on VAT, adequately address the nation's most pressing needs like unemployment, inequality, and the energy crisis? To help us navigate this conversation this morning, we are incredibly fortunate to have a distinguished panel of experts, all with a wealth of experience in the financial and economic spheres. Leading us through this discussion will be our moderator, Refiwa. Please stand up, Refiwa. Refiwa Madenza. She's flown in from Cape Town, just highlighting spots at the budget with the minister. So we're very fortunate to have this award-winning journalist, business news anchor, and producer at ENCA. Please give a resounding applause. Thank you. We're looking forward to your sharp insights as you moderate this panel today. And it's not an easy panel for you to moderate. I'm going to get this one right. I am. Ntlanhla Phayi. Did I get it right? Ntlanhla Phayi is the lead economist for strategy and research at PwC. Phayi brings a wealth of expertise in macroeconomic trends and strategic advising, making him a critical voice in analyzing the broader economic impacts of this budget. Let's give a round of applause to Phayi. Welcome back, Lara Hodes. Lara Hodes is the economist at Investec Bank, and her focus on economic forecasting and market behavior provides a unique perspective on how the budget measures may affect our financial markets in the long term and short term. A round of applause for Lara, please. I'm going to wake you up with the next clap, right? We want more participation. I'm sure people online are eager to get their questions across. Kia Nonyane is the head of scope in Prime Africa. He's just moved there very recently. Kia's leadership and expertise in financial strategy across Africa will be instrumental in understanding the budget's potential to drive regional investment. Congratulations on your new role as Head of Africa, Kia, and welcome again to Regenesis. Much better. Adwa Magenshwe, Portfolio Manager at Momentum Securities, known for his expertise in managing high-performing portfolios. Adwa's insights will help us to understand how the budget will shape the investment portfolio in the future. Thank you, Adwa, and welcome to Regenesis. Wayne McCurry needs no introduction, very recently retired investment analyst with decades of experience guiding investors through very complex market environments. Wayne's insights into investment trends and strategic risk management will enrich our discussion today. We're truly honored to have you with us, Wayne. Welcome back. Last but not least, our very own Annetjie van Rooyen, CEO of My Wealth Investments, and a renowned stock market analyst. Annetjie has a deep understanding of investment strategies and market dynamics, and her expertise will be invaluable as we consider the budget's implication on the investment landscape. I'm going to now hand over to Refiloe. Without taking your thunder away, let's get into a very robust, engaging discussion. And I'm going to encourage our audience today, like I did getting you to clap, to get very participative, ask difficult questions, challenge assumptions, and please share your thoughts. This conversation is about gaining a deeper understanding of how the budget speech will not only shape the future of South Africa, our lives, and the next future generation. So let's create a thoughtful and robust debate with Refiloe as she leads us into discussion. Over to you, Refiloe.
Thank you very much. I appreciate it. And good morning to everybody. I really appreciate you having me host this esteemed panel this morning. I wanted to start our conversation off with the views that came out of the delivery of the national budget yesterday. So there were those that were optimism about the stabilization of debt, the minister's optimism about economic growth, but there are those that are very skeptical. And Vusi Thembekwayo, you'll know him, a venture capitalist, had this tweet that he put so eloquently. It said, "It's official. They have run out of ideas. It's now evident that there is a lack of innovative ideas. The recent budget speech did not present any novel proposals, and I do not foresee the garnering support from other political parties." We'll see about that. Notably, numerous well-researched analysts outline potential strategies for South Africa to navigate the current predicament. Nothing new, nothing fresh, nothing inspiring, nothing mildly indicating that they understand the desperate state of the nation. And I think that's probably the question I want us to have in mind today when we unpack the national budget, but also the trajectory of investments and economic growth in South Africa. Are we in a desperate state? Annetjie, I want to start with you this morning. How do you think the market initially reacted to the budget speech? Did we see any market reaction, the Rand as well?
Thank you, Refiloe, and welcome to Regenesis and My Wealth Investments, and to all the attendees here. Very warm welcome from My Wealth Investments as well. The reaction was muted because it was 100% in line, or 98% in line with what was expected. So there was really a muted reaction. We saw a slight depreciation in the currency and a slight increase in the bond market yields, but I see that that has already fizzled out this morning. South Africa is just one little spot in the global economy, so the US markets started rallying in the futures market on the back of better than expected inflation numbers, and of course that filtered through to our market. So personally, I have applied my mind and I asked myself the very same question after that budget speech. And although it was a surprise to me that they announced a second increase in VAT, I do think that they might be paying a price in the short term for longer term gain. Because inflation will only increase by 0.2% on the back of this first increase in VAT. Maybe they're buying time until the reforms kick in. And the economic growth has to come from that, because we desperately need better run infrastructure in this country for economic growth. So I would say that growth target of 1.9% is at risk because of all the trade shifts that's happening in the global economy. There's a lot of uncertainty, but that doesn't only affect South Africa. In terms of debt stabilization, I think that there's more credibility now that the debt will stabilize at 76.2%. So this was a credit neutral budget. So I do think there were some positives also on the infrastructure spending. He said that they will float infrastructure bonds, which makes it far more project specific and easier to control, because private investors are not going to invest in a debt-ridden SOE.
Yeah.
So a lot of the things actually do make sense, but the sad side of the story is that South Africans are poorer, and hopefully the Reserve Bank can help us with another interest rate cut to make up for this VAT increase. Hope he's listening.
Let's hope he's listening. We can only hope. Kia, then let me bring you in here to say, what do you think the market specifically would have looked for to entice some positive sentiment when it comes to investments and investment strategies?
Well, the market really didn't care about what happened yesterday, and that's the honest truth. I think South Africa operating in a very global space really takes up very little of investors' minds around the globe. I think for us as citizens, it means more. And for me today as a citizen, I'm very disappointed. And let me tell you why. In the NDP that Trevor Manuel developed, he named 2 institutions having the right economic policy tools to influence GDP growth as the Reserve Bank and the National Treasury. And let me tell you, every time I listen to either the Reserve Bank governor or the Minister of Finance, I come out with a lot of wanting. And I think for me, as an investor, I ask myself the question that the ANC government has announced infrastructure build plans since the 2020. Have we really seen it? Because what they did was just double account for the independent power producers. And did that really filter down into the economy? No, it isn't. So we can announce a 1 trillion rand spend on infrastructure. Is it really going to happen? Is there really going to be efficient allocation of capital? And I think if we're going on the past, there's really nothing that we can be proud of with that.
That leads me very nicely to Kanti, because this VAT of 0.5% in this financial year and then in the 2026 financial year, he said is dependent on economic growth and improvements in the economy. And based on what Kia has just said, it's unlikely that we're not going to see the implementation of the second 0.5% VAT hike. Am I right?
I think that one of the important things was actually, I mean, I guess sometimes we have to look back so that we can look a little bit of ahead. We certainly know, obviously, last year we struggled quite a bit, and the shortcomings as we saw them was that they came from 2 particular taxes, VAT and also the fuel taxes. And both of those are consumption taxes, so you are hoping that actually something happens in consumption this year that actually allows us to collect that. And so certainly there's hope that this year we do a little bit better. And perhaps the way we've thought about it is that if you think about, I guess, real incomes, that there's some space perhaps that real income goes up a little bit on the basis that inflation stays low, and then there is some, perhaps especially from the public sector, because they're getting above inflation increases, there's that perhaps 1% in the middle that they might get to be able to actually push that up. So that's the hope. But many organizations are struggling to bring people up. And we also know that from this budget, that we didn't have that adjustments in terms of the tax bracket. So hope that probably swallows a little bit of some of that extra income that would have been coming for certain people. So it's difficult to see that we can get there, but one actually hopes that we will get there. But it's likely that we are going to need that, especially given some of the challenges that we are facing, and that this growth number, given all of the challenges that we're facing globally. I mean, one key challenge is probably what we are seeing in terms of the possible trade wars that we are starting to see. That might undermine South Africa's growth, given that we are a commodities economy, and trade, by and large, requires that we produce things and we trade them, and those inputs usually come from the sectors that we are really known for. So I think it's more hope than than anything else. But
Just
I
like
think
the minister, very optimistic. Before we get to Laura, I want to come to Odwa and ask, how difficult does that make structuring an investment portfolio? Because the economic downturn that we've just unpacked now affects companies operating on the ground. ArcelorMittal is one example, and you want to be creating a solid investment portfolio, but where do you look given the difficulties of some of these listed entities?
It's definitely a difficult time right now, and as you rightfully say, if you look at the last earning numbers, if you look at ArcelorMittal currently suffering, we look at other commodities companies as well, also in a very dire situation, and we also saw it in the budget. We are getting less from company income taxes as well. So this plays further into that. And now, if you look at retail as well, which is a focus with this now, people have less to spend. And with that, it also adds more pressure to the companies to be able to get those incomes levels that they're aiming for. So growth-wise, it seems like right now, if you have, you hold, but the alternative is to try and hedge your risk around what's happening with those types of companies. It doesn't see, and with the GDP outlook that they have, it's very unlikely we're going to reach those 1.8%, which then reduces further the opportunity we have to grow portfolios. So right now, externally seems to be looking at other markets except for South Africa seems to be the only option if you want to grow your portfolio.
That's very unfortunate, isn't it? And Laura, you and I were speaking about that 1.9% growth, and how optimistic the minister actually is. And if we don't see real work on the ground when it comes to infrastructure projects in key sectors, we're probably not going to see that at all in the medium term.
Yes, so we as Investec definitely feel that's a bit optimistic. We've got in the range of 1.5%, maybe a bit lower, and they're looking at 1.8 over the medium term. That is possible should we get their implementation of the structural reforms they've been speaking about. So there is a base effect coming through in that 1.9%. We saw 0.6% growth in 2024, which was obviously brought down by agricultural production in the third quarter. So we will see that base effect. And also, even though the electricity supply situation has improved, it didn't come through in the numbers in 2024. So if the situation continues and we see that continued halt to load shedding, we could see the benefit come through in 2025. And yes, so there's definitely improvement on the structural reform side. If what's put forward is implemented, because implementation is always the key word, we definitely could see 1.3 to 1.5 growth, but I think 1.9 is a bit optimistic at this stage. We also don't forget, as the other panelists have mentioned, South Africa's a tiny, spot in the world, and we have to look obviously at what's happening globally. So heightened geopolitical and trade tensions will definitely have an effect on growth, and we're an commodity export country, as was mentioned. So we have to look at manufacturing conditions globally, and the general state of the global economy, because that has a very big influence on us as a small open economy.
Yes, and with that, how important would it be, Laura, to make sure that you are creating job creating economic growth? Because if you've got more consumers that are actively participant in the economy, surely we're able to withstand some of the outside shocks that we might see if we've got a strong active market locally.
Yeah, so in order to create significant sustainable job creation, we need GDP growth. We need growth, unfortunately. So it does depend on the global economy and growth in the global arena. But yes, so business confidence is still depressed, in depressed territory. We need an increase in confidence to drive investment, to make people want to extend their businesses and grow their economy, and then to attract the right talent. And so our unemployment situation, as we all know in this country, is critical, especially in the youth segment. And growing the economy in an inclusive manner is a key priority of government. So yes, we need to grow the economy in order to create those jobs.
No, absolutely. Wayne, I'm going to bring you in here, and I must just put it out there. We used to interview him at my place of work as a market analyst before he retired. And he always gave interesting insights around, markets are cyclical. And he was always very optimistic about the rand in particular, is that, everything will rebound. And I wonder, Wayne, as you look at the situation, you've heard the budget speech, you look at investment portfolios and reworking them if you need to. Do you still have that optimism that things are cyclical, there are rebounds that will happen, and things will generally get better?
Well, yeah, quite correct, thanks. I am, generally speaking, optimistic, but sometimes you worry a little bit about being an optimist. And I suppose on that particular question about optimism, when I listen to the SONA over the last 2 or 3 years, you get this inherent underlying feeling from the state president, and he always says, we are a resilient nation. And we are. We're incredibly resilient. But the reason why we're resilient is that our government actually fails us. So
you have to make a plan.
You've got to make a plan. So you make a plan with education, you make a plan with healthcare, you make a plan with electricity, you make a plan with robots, our insurance, and the informal. It's quite interesting watching the informal traffic wardens. But yeah, and we make a plan. Now we've got to make a plan with water at our houses. We've got to put in JoJo tanks. And so we are resilient. I'd rather be successful than resilient. We are resilient because of inherently failures by the government themselves in delivering what we should expect any government to deliver. Now, the government's done a lot. They've done serious economic structural reforms, of which the biggest is Eskom. And now it's taken a long time, and it had to get to desperate situations before the government acted. And maybe that's the problem, is that all the structural reforms we see are reluctant because there's no other answer. And that's ideology, I suppose. And the ideology is sound in that the government truly believes they are the best unit, the best organization to deliver to the people. And that's very noble, and that's the correct philosophy. Unfortunately, they can't, and they've proven it time and time again. When you think of all the, total catastrophes with state-owned enterprises and how much money, I don't know what the total is, but I wouldn't be surprised if it's 600, 800 billion rand has gone into bailing out state-owned enterprises over the last 20 years. And as I said, the structural reforms they do announce are absolute desperation. When we got to stage 6 load shedding, they just said, well, we've had it for 15 years, but now we've actually got to do something about it. And Transnet and the ports are in that same situation now. So when I look at the budget's a strange thing. An AI robot could have written a budget because it's the same budget for the last 15 years. So you get the same story. Next year, debt will drop. Next year, not this year, but next year, debt will drop. Next year, growth will be better. Next year, we'll do structural reforms. Next year, the tax burden will be more equal. Next year, we'll have better teachers, better education, better policing. And then you get this nice, warm, fuzzy feeling. Yeah, okay, next year. And yeah, and it just unfortunately carries on. So our debt to GDP in, I don't know, 2008 was 25%. It's now 76 or whatever. You know, so as I said, the government has done a lot of positive things, and I have a great deal of empathy with the finance minister. I had breakfast with the finance minister last year before I retired. It was just me, the finance minister, and 400 other people. And I mean, it's a juggling act. So what we truly need are structural reforms that are put through because they want to be put through. And Eskom is forcefully put through, but that's at least better, much better. Transnet has got to come. The seaters, they just don't work. There's so many low impact government programs that actually just don't deliver what they're supposed to deliver. And then of course it's largely symbolic because the numbers are quite small. I mean, we must have the most number of cabinet ministers per citizen anywhere in the whole world. So, you know, they've got to do it differently. I mean, the definition of insanity is repeating the same thing over and over again, expecting a different outcome.
And does that hurt us, Gandhi? I just want to bring it to you based on what Wayne has said. Does that hurt us when we go with our investment begging bowl in hand to the likes of the World Economic Forum and so to say, come over to this side, you know, we are ripe for investment. And they look at the situation and they see that nothing's really changing in certain sectors. But now also you're coupling it with all this misinformation about our policies and so. How badly does it hurt us? Because essentially you need investment to put these structural reforms through.
Sure. The main thing is always credibility of in budget. So do people believe we're going to do what we said we're going to do? And for a number of years, I'm not sure how South Africa stands where this time around and how many people came to talk to us at the World Economic Forum. But for some time, they were not coming. People stopped actually approaching us and engaging with us because they just thought, well, we've heard this story, as Wayne says. That story has been told many times. Even now, I mean, we are thinking about where we were last year in terms of what we said the deficit was. We keep missing that stuff all the time. And so that is an incredibly important thing. And I suspect it also, well, I don't suspect, many of our clients are telling us, even on the energy situation, that, you know, these improvements have been there, but we are looking for a moment where we can say, okay, we can trust that actually that sector, the energy sector, is actually stable. Because once you start to put in the investment, you hope that it actually doesn't change your fortune. So basically part of the reason why we're not seeing a lot of that traction is because many people are still holding on to just be able to feel a sense of comfort that we are at a place where we can actually sustain that energy without having to find themselves in the middle of a project and having to actually find an alternative source of energy because what they thought was there is actually not available. So that is really that part about whether or not actually we are credible and we can actually deliver on what we said we would deliver. And the minister said something I thought was very interesting yesterday, which he confirmed that one of the issues is that if we are not yet, the worst is not yet behind us in terms of credit ratings, we could actually be downgraded even further, and that would actually obviously mean real trouble for the financial sector in particular, and obviously for other sectors. So, and he understands that because a lot of people are still watching because they are still looking at this and saying, can we actually believe the story? And the main thing is that credibility, and I agree that year after year after year, we keep slipping up. And as my colleagues have said, if we're looking at just these growth numbers, they are positive, and we are likely to miss them, as we usually miss them. And when we miss them, people are going to look at that and see that's what we're talking about. And that's really, at a time of such uncertainty, we don't want to be playing that same game.
Yeah, Laura, just quickly before I come back to this side of the stage, apart from the energy sector and the water issues that we've seen, what are the sectors that should be focused on that would perhaps bolster that credibility?
So, as they've said, they've raised taxes, increased VAT to concentrate on specific sectors, health, education, social protection. But of course, you know, our biggest constraint is on the logistical side. And a lot of work's been put into the transport sector. You know, quite obviously that R1 trillion on the infrastructure side. You know, there's a lot going to SANRAL to improve our roads, build new roads, and PRASA to try and get the commuter rail lines up to speed, so people have shorter, you know, transport times to work. And then, of course, just the obvious ones, development, skills, you know, investment in skills development so that we have the right people coming into positions, you know, which is extremely important. But I think we covering the correct areas. You know, as we've done a lot on the electricity front, which was a major issue, which will definitely bolster economic activity. As I mentioned, a lot done on the transport side, especially mentioned in the budget on the ports. You know, we export a lot, so that's very, very, very significant. And yeah, it's just, as I mentioned before, it's just implementation. So I think we've got the correct initiatives in place. It's just government just needs to follow through and implement. And I think then we'll be on the right track.
That is where we fall short constantly as a country. How many times have you heard that we've got the best policies and our trouble is the inability to implement them? Aniki, I want to bring you in on this one, and it's a little bit controversial because South Africa in itself is a completely different economy than the US. But I was thinking about it last night, and I wondered, and I'll get some insights on the same question from Oda and Kia as well. Do you think the market would at some point like to see government efficiency projects like DOGE in the United States that would encourage investment in the local stock market and not necessarily just focus on offshore opportunities?
Yes, actually, it's so interesting that you mentioned that because I've been sitting here thinking, should I say that's what we need? But I do think it would be a brilliant idea, because if government was running efficiently, the state-owned enterprises wouldn't be in the state that they currently are in. Look, give them credit where it's due. There's been an improvement. We've had Operation Vulindlela, and there's phase 2 that's rolling out, and that has helped to improve structural reforms. We've seen increase in electricity production over the past year. Imagine we didn't have that. We got 0.6% growth with all the improved electricity production. So without it, where would we be? Anyway, so there has been progress. Transnet at the half-year mark, they made a loss of 2.2 billion. That was pretty recently. But the freight rail division contributed 53% of the revenue, and that was a 8.7% increase from the previous year. So we definitely are seeing improvement. They also had 78 million tons railed at the half-year mark. So they're looking to do 165 million tons for the full year. But the reason why they're running at a loss is purely because of debt servicing costs. So there's no money to spend on expansion and infrastructure. They're paying off debt. And the same goes for Eskom. Eskom, he said there's an improvement. The last debt relief payment, 70 billion. They have now come down to 40 billion this year and then 10 billion next year. So although there's improvement, it's still a pretty bleak picture out there. And that's costing us, in terms of GDP, probably close to 3 or 4%. And the growth rate, even if we can achieve 1.9% or an average of 1.8%, that's not enough to grow employment or to employ more people. So I would love if we could see DOGE or a little DOGE department getting active in South Africa. But I do think it's smart, the move that they're going to not provide balance sheet support in future and make it project specific, because it gives your investors far better control over those projects, and you have to provide investors with feedback. So I think that is a very positive move in the right direction. That's something that would have been suggested by Doge.
Yeah, no, absolutely. And Laurie, you had mentioned that in the end of his speech, he speaks about a government cleanup that would need to happen there. So we'll get into that in a moment, just to get Kia and Odwa's view on what would excite the market for local investment as opposed to just looking offshore. And then we'll also open it up. I'm sure everyone has got something that they want to pick our panel's brain on this morning. So we'll open it up after those engagements.
You know, I've been listening to a lot of the panelists, and they've a lot of sympathy for the Minister of Finance, which I simply don't have. And for me, it's the National Treasury and the Minister of Finance put the country and its citizens in a false dichotomy. And what I mean by that, they want to equate efficiency to austerity. These are two totally different things. Austerity is literally cutting down on spending. Efficiency is spending the money that you said you're going to spend on the right things. And for a government that speaks about the economy in an abstract way, I mean, the ANC government and all politicians speak like the economy is there and they're here. And truly speaking, the economy is where it is because they have not been focusing on the structural reforms and growth initiatives. And for you to go and speak like, we are going to grow the economy, but let's cut social spend by 30%. Where do they believe that the retail earnings on our JSE is coming from? It's coming from the SRD grants. It's coming from the social wage going up. And we're seeing companies on our bourse, ShopRite, Pepco, doing 40 PEs, upwards of 32 PEs, showing that they're very resilient. And they're resilient because the state has a lot to do with that. And we ran a study in my team, my research team, looking at the multiplier effect of social spending. It's very close to infrastructure spending. I think infrastructure economic multiplier was 1.9, and social spending multiplier was at 1.78. So when people say cut the wage bill of the state, I think what they're asking is be more efficient as a state. Because if we cut the wage bill of the state, or we cut the state's ability to employ, we are going to see it in the economy more than anything else.
For me, I think we've been lucky as well as the JSE or South African market, where we have had businesses that have been able to pick up on the shortfalls of the government, with the likes of Grindrod, with the railing system, with and the such. So, and we are seeing also with the spending trends, ShopRite taking the lead with the retail sector, that even the consumer is being looking at value for money. So I think that overall, with what we heard from the budget speech, is that there is still much more, and efficiency, as Gia is saying, is more necessary than right now. As you started, they've run out of ideas. With companies now struggling, and it's not locally issues. With platinum miners, it's just the cycle of the platinum commodity. It's currently on a downturn. Yes, so you're not going to be getting those company income taxes from that. Personal income tax is expected to increase because of we're not raising according to inflation. So we ask. They are not showing anything new, and we would need more innovation, not only in keeping the lights on with Eskom. We need other innovation in terms of other industries perhaps to look into. The JSEs also has been the same. There hasn't been any new IPOs, etc., except for struggling businesses breaking away from existing companies. So we lack growth as a country rather, and that we need government intervention in not maintaining what should be working, but in building what would help everything else.
On that note, I think we should open it up to the floor. I wonder if we've got a roving mic ready, and if we've got any hands. Anyone want to engage our panelists this morning? There's one hand over there at the back.
Hello, I'm Erasmus from PSG. I just want to ask another question. Do you think we're going to get off the grey list, and when?
I've read an article this morning, and I've also heard this from other people who work at other financial services providers, that the general consensus view is that they're aiming for October. I think it is optimistic, but that is what I hear. There's still 2 items outstanding, and I've recently seen, I'm sure you would have also noticed, that a lot of accountable institutions, for instance, like crypto asset service providers, also had to admit their RMCP to the FIC. It's the first time that the FIC is asking for risk management programs. So they are definitely making progress. I'm hearing October, but I can't confirm that.
Any other questions? Look, I've got a whole list, so I could go all afternoon. So there, one at the back over there.
Thank you very much. So I've been hearing words like reliability, implementation, hope, accountability with our infrastructural reforms. So my question is, on the economic growth, the budget projects growth for economy. So what are the key drivers for this growth, and how realistic are these projections given our economic conditions right now?
Auntie, do you want to?
Maybe I'm going to try and dodge it a little bit by saying one of the things I thought was interesting, and it's been mentioned about rail infrastructure, especially passenger rail. And I want to get to that because part of the discussion is always about, I guess, we talk very much about investment in sort of big infrastructure and very little about actually the infrastructure that actually is closer to people and supportive of ordinary people. So if you think about just the rail, and the minister talked about investing in trying to, in passenger rail and making sure that trains are available across townships. That conversation is important because you want to be able to lower, or at least increase the social wage or lower costs of people, ordinary people, to be able to get to work, for health services, for education. And that is because part of the big increases that we've always seen in the instability in the labor sector is because of the high structure of costs for ordinary people. So basically, if you are working, even if you're working in a small business, you are always looking for a bigger salary because actually the public, you're not able to get the social wage, and so your costs are always higher. And so that has, for quite a while, sort of strangled those smaller businesses and even bigger businesses in terms of profitability. So what you do want is that kind of support and investment that allows ordinary people to actually keep much of their wages and be able to actually use it. Then you sort of actually open up space for other businesses to support. This is more theoretical because there's not a lot of work that has been there, but certainly a lot of people will complain about lateness of staff, or actually the high cost of tax. I mean, some people spend as much as 40% of their wages on transport alone. And that is something that's quite important if we're thinking really about social infrastructure. The infrastructure that we have to invest in is, while yes, we need big rail to actually carry our commodities. We need make sure that the trucks are going in. We need big energy to make sure that and cheap energy for steel. Those are important things. But there also are the important things that actually keep businesses alive, smaller businesses alive, and they keep them profitable, so that actually people are getting into those sectors, and that actually we are stabilizing the labor sector in a way that allows us to actually grow. So we talk about employment a lot, but there are actually things that are not just about labor laws, as people complain about, but actually about supporting labor itself to be able to actually get by. And that is something that's quite important, that I thought that, if there's something positive that I thought came out of this budget, was probably that kind of focus that actually goes back and says, what kind of infrastructure is actually supportive to ordinary people, to workers that actually have always needed for a while. I hope that sort of plays into some of that. But certainly there's a lot more we can talk about infrastructure, and we've talked about it for a long time. I must say, actually, new ideas, yes, we've always wanted them, but could we actually keep with the ones we've already brought up?
Good morning, everyone. Shortly before the budget speech yesterday, I read an article about a newly appointed banking executive that received something like a 70 million rand sign-on bonus. That would make ordinary South Africans believe that corporates clearly have money. What is the panel's view on why the minister didn't fiddle with the company tax rate?
Wayne, do you want to start with that one, perhaps?
I certainly didn't get any 70 million sign-on. But look, our company tax rate's already high, our individual tax rate's already high. But understand, there has been an increase in individual taxes. There's been no bracket relief for 2 years, which means you pay more tax as your salary goes up with inflation. And the government's kept very quiet about that. And in fact, not giving bracket relief on individuals raises more tax than what the 0.5% increase in VAT does. But it's kept very quiet, and it's the second year now that there's been no bracket relief. But company tax, you know, if you want to drive people away, companies can go anywhere and invest their money, anywhere. And if you up the tax rate, it just makes it less important to come here. And in any case, you know, company tax, if you take out the very cyclical mining companies, company tax doesn't pull in as much money as personal income tax or PAYE. It's actually relatively small, if you like, to do that. Of course, when the mining companies kick in, the government coins it, and that's what happened, I suppose, in the from 2002 to 2008, and then luckily enough for us during COVID, the extra profit and the tax paid on that profit made by the mining companies actually paid for the government's 500 billion, whatever it was, incentives and payout to help us through COVID. And you're lucky enough, without that tax windfall, the government's finances would be in a significantly worse position. So, I mean, it's easy to criticize the government, and they need to be criticized in many, many places, but they also need to be complimented in many places, and not fiddling with company tax is actually a compliment to them. Of course, we can argue that shouldn't have gone up either, because there's lots of inefficiencies in the government that will probably give you more than the extra VAT, but governments find it very difficult to cut entitlements, because cutting entitlements means driving voters away, essentially.
Any other questions?
Can I please ask concerning the part where you spoke about the growth and load shedding improvement? I'm not going to criticize the government, just like you say, or I'm not going to upload it as well, because I've noticed that yes, we went a long time without having load shedding, which was a good improvement, but slowly a few days ago we have been experiencing it. So is this improvement a realistic improvement, or it's hope that things are going to be better? And also, is this a way of making us shut up in a way, or it is a realistic movement that is happening in the improvement way? And what measures do we have to look into, not hope, like the real realistic measures that we have to look into for us to say, wow, there is an improvement? Because we cannot rely on statistics and tell someone who is not educated that, you know what, the government is doing a good job whilst they're in the dark on a certain day. And especially the fact that the past days we have experienced load shedding after not having it at all.
Yeah, I saw you nodding vigorously there.
Yeah. I was in Cape Town a week ago on a business trip, and over the weekend I was a bit tired, so I went to play golf. I know that's counterintuitive, but so I drove to the West Coast, and you know, when I was driving into Langabanas, there was this cathedral-looking like a structure, and somebody in the car asked me, is that a mine? And I was like, but there's no mines here in Saldanha. And the next day, played some golf and then went out to Paternoster, and I passed by this cathedral-looking structure, and it was Saldanha Steel. And why I mentioned this is quite important. Is when Jan Smuts got Hendrik van der Bijl to come to South Africa to build the high frequency grid model, the two pillars he built this industrial complex that South Africa was cheap electricity, so cheap energy, and steel. So I ask the question, I often ask my team the question that, are we happy with a lack of load shedding but very expensive electricity? Or are we okay with very expensive electricity and high input costs and high inflation and the majority of the country really not affording electricity? I mean, for me, I probably can, but I mean, do people really afford electricity? And that for me is the question that I asked myself. Because Saldanha Steel closed in 2019 after 20 years of success, creating jobs, really dealing with the economy in a very desolate place. Saldanha Steel is closed because we have high electricity costs. So for me, the better question to ask is not that we have availability of electricity, is how cheap is our electricity going to be? Because at the end of the day, even going into the fourth industrial revolutions, data centers, those are energy intensive industries. And if we're going to have such expensive electricity, it's really going to be a non-starter. So my next question to the government itself is, how do we bring down the unit cost per kilowatt hour? And I'd be more happier than having uncapped electricity more than anything else. So that's how I'd answer the question.
So just in terms of while we had, you know, consistent, we had no load shedding for quite a long period of time, and now that we've got the, you know, had few days here and there, is it's also unforeseen. One of the reasons why Eskom was in the position it was in is lack of maintenance on the big power stations and inefficiency. So once in a while, there are unforeseen, you know, the maintenance is ongoing, and it's obviously, you know, there's still a lot to do. So often we do have power trips, and but definitely the price of electricity is a very key issue. But in terms of why we've had these slip-ups is often unforeseen events, like due to lack of maintenance.
Are there any other questions on the floor? There's one at the back there.
Thank you. Morning. My name is Ufenze. I'm the founder of a program called Mjojo Finance Play, which teaches school kids from grade R to 12 and post-matric about financial literacy. And I have two questions for the panel and maybe the house at large. And my question is, what role can private financial institutions play in supporting programs that teach young learners like we do in the townships about financial literacy and about investments? And the second question is, are there any opportunities for tax incentives for companies that do that support such programs? Thank you.
It's actually a very interesting idea. Yeah.
Economists have a lot to learn about tech. No, I think one of the key things that's always been interesting to me is about when we talk about the private sector. And when we talk about the private sector, we say we want to inspire the private sector to invest. And on the back of this question around energy is that the whole thing about energy and production of energy, solar panels and all of that, is actually available investing in the now, what we know as the new energy complex, which is about also renewables and all of that. And many communities, including young people that are growing up in these communities where there are Stokvels, their parents and all of that, there's always an opportunity for those people to think about saving and investing their money in their own communities. And being able to say, for example, when we think about trying to get the private sector, that when we're getting the private sector to invest in energy, we mean actually local people actually, because those are private people, they're not the government. And so in that sense, I think one of the things we haven't done is really to even expand the idea of what actually being literate in terms of finance and financials, not just having a bank account and then maybe every month you save 10 rand. But actually, what does it mean to be financially literate, to understand opportunity, to be able to also to support that opportunity? And I think that's an important part of what might actually be needed to do. And then we can talk about companies that support those initiatives, that co-invest perhaps with communities that need to get into these kinds of projects and bring in people into the financial and economic world and investment world in a meaningful way than what we've actually talked about. So I would think that that's important. Where you have incentives and I guess breaks are sort of the tax breaks, if you have some retail bonds that perhaps are not taxable, so that's something there. I remember there was also investments around education. I can't remember what that was. For a while there was an investment like that. So there are some of those things, but certainly I know there's also some tax breaks. I don't know if they've removed them on private equity investments and things like that. So there is some of these things, but perhaps we need to be a little bit more aggressive in thinking differently. This word innovation came up around how we think about actually financial literacy and financial inclusion, because those things should actually work together, but in a meaningful way. So it's encouraging that people are interested in that. I would suggest that we need to push it a little bit further and actually could deliver much better than we've actually delivered. I know in Stockfells, a lot of people bend about big numbers, about, there's 24 billion rand in Stockfells or in community investments. If that was true, that is the private sector money we need to actually invest in things that are actually needed in local communities and in the private sector itself when we think about it outside of big business. Because I know when we talk about private sector, we think about big white men. But we're not talking about ordinary people actually who are actually privately investing in their own needs and actually creating value where they are.
I think it's about time for us to start wrapping up the discussion, unless there are other pressing questions that anyone would like to ask. And if our panel would like to make any closing remarks, now would be the time. I do have one question. So before that, I have to ask you, and maybe Annika, you can get in here. Are there risks to stocks like health stocks when you see the active moving on the NHI, which has concerned many of the companies like your Discoveries that are listed and have done immense to invest in the health space in South Africa? Do policies like that, and perhaps any others, pose any risks to those stocks?
Yes, definitely. Initially, we saw a massive sell-off in those stocks when the NHI was announced. But then, after the formation of the Government of National Unity and the investor confidence that came along with it, and the fact that these parties are now willing to work together and put issues down on the table and actually discuss it and debate it, like with many other policies, investors have become positive again, and we saw a huge recovery in those stocks. So now that uncertainty has crept back in, and I saw a huge allocation to the health sector when the budget was announced. It was in excess of 40 billion rand. So it made me wonder whether, quite a large chunk of that wouldn't go towards NHI. But I do think that government has bigger problems to worry about right now, because with the US withdrawing aid to South Africa and them having financed about 17% of the HIV program, I don't see a large amount of money flowing into NHI. Plus, I think there's too much discussion that still needs to take place around NHI. And I still think that it will face quite a few legal challenges. But yes, the investor confidence and the fact that they have been able to find solutions for other policies is a positive. But I do think that on a lot of these policies, we need more clarity from our government.
Okay, so shall we start with our closing remarks? We'll start with Wayne and come all the way down. Thank you.
First of all, to the lady who asked the last question here, you, the true hero of South Africa. Thank you for what you're doing in the community, and you deserve a round of applause far more than any of us. Thank you. Yeah, well, I suppose we carry on as South Africans. Things are never quite... I heard a good definition of South Africa once. it's not as good as what it should be, but it's never as bad as what it could be. So we carry on. We are resilient. We'll survive all of this. Hopefully we go into better economic conditions going forward. I was quite optimistic because, interest rates were being cut worldwide, but now this tariff thing throws a bit of a spanner in the works. That might stop the interest rate cuts globally. But we're still here, and hopefully the future is in fact better. Hopefully next year is better.
Yes, so a lot's been said. I'm not as negative as Kia on the budget, and I think it definitely the GNU has been positive. A lot has been said that wouldn't have been said previously, and I think they still haven't agreed on the budget. So let's see what happens going forward. But I definitely feel, there are definitely obstacles, and nothing's perfect, but I'm definitely more on the optimistic side. I don't feel we'll get the growth of 1.9% that's been put forward, but I definitely think there are measures in place for things to improve, and yes, let's wait and see.
I'm trying to find something positive. Look, I think one of the things, when we were talking about this last day, one of the things we were worried about was a position that we would not have the opportunity to pass a budget. And we still haven't crossed that hurdle. And one has to sort of be hopeful for the little mercies. So one of the things I'm looking forward to is to watch the situation around how we actually pass this budget. Because one of the things that, as I was listening to the leader of the DA, complaining about the budget, it occurred to me that usually before a budget we have a fiscal framework in which the government really agrees on what are the basic tenets of what we're actually trying to do and what we are basing this budget on. And if they are quibbling about this, it means actually they still have not found actually a framework on which we actually work on. We want to pay debt, or we want to keep this low, we want to not increase taxes, we want to protect the credit rating, those things, and then you actually deliver a budget. So it seems to me that they haven't agreed on those things, so it's something quite close to watch in terms of what we'll be doing over the coming weeks or even months.
For portfolios, I think that as much as the economy is not as shining as we would love to see it, there are still very much opportunities to be taken on the market. Again, as I said, there are some private companies that are really lifting the weight and benefiting from the shortfalls of the government. And so those are the opportunities I think there are in terms of portfolios. I think that we can be gloomy as much as we can with they're never going to hit everything, but there's always an opportunity for where money can be made for investors.
Yeah, in my closing remarks last year, I said bet on the government, so I wasn't as pessimistic as I am this year. And I mean, you'd have done pretty well if you were just putting your money on SA government bonds last year. I think the total return about 17.92 across the yield curve. So, I mean, my closing remarks are actually, first of all, is that we might have spent 2 hours dissecting something which was a non-starter, or it might never ever be passed. But I think if my bet is going to come right this year, I'd say hold cash in South African rands. Why? The dollar is just too weak at the moment, and there's an act of war in these tariffs that Donald Trump has put. So, my bet last year was I say government bonds. This year, hold South African rands. I still believe in the sovereign, but yeah, act of war.
Okay, my closing remark, I would like to leave you with something positive, because inflation is under control. We're sitting at 3.2%. The aim is to reach the midpoint of 4.5%. The range is 3.6%. So that still gives us space for lower interest rates, regardless of the trade wars that are raging. The other thing that is a negative that I think can be turned into a positive is the fact that there is a strained relationship between South Africa and the US. And it's been made very clear that the US negotiates with transactional values. So it does give South Africa something to take to the table. And all the countries are retaliating and putting counter tariffs on the table. We have minerals, we have commodities. Why can't we go to the table, put something on the table that America wants from us? Our steel industry, we are bleeding jobs, bleeding money. I know we have constraints in infrastructure, but maybe it's time that we recalibrate our economic policies to put us on that growth path that we need to create jobs. So in my positive note, I would like to give a lot of credit to our Reserve Bank. I think they've done a tremendous job. They have really controlled inflation very well in South Africa. And even the governor said his worst case scenario would be 5% increase in CPI. And if we see a blowout on the currency, he looks at 21 to the dollar, which is not that bad. We've been at 19 and 20 levels before. And that will be temporary if that should happen. So that is the positive. On the other end, remember that portfolios can be diversified. And even though we are in Africa, we can invest anywhere in the world. So it shouldn't hold you back. Plus, if you look at valuations, keep a cool head. South African equities do offer value as an emerging market. The US has been expensive. We have been seeing flows into emerging markets. Our bank sector has done extremely well and still very undervalued. So I know my panelist colleague next to me, my friend Kia, is very negative. So I just want to remind everyone that this session is for information purposes and it should not be seen as investment advice. Thank you.
And on that note, ladies and gentlemen, an applause for our panel. Thank you very much. And with that, as we wrap up our panel discussion, I'd like to call on Dr. Marco to come and give us our closing remarks for the morning. Thank you very much.
Thank you. Closing remarks or just thank you? So I would like to thank our distinguished panelists. Thank you so much for your time. I know your time is very precious and your time is very expensive. So I know you didn't charge us anything for your time. So Penny and I have my accent comes from Croatia, so as a little gesture of appreciation, we would like to offer you to come to Croatia for 1 week holiday for free, stay at our place. We have a beautiful property on Croatian Adriatic coast. Okay, so please talk to Aniki and we'll make a plan. Yeah, it is beautiful discussion. I enjoyed this discussion. I enjoy listening to you. There's so much knowledge, insights, and it's fascinating discussion. I'm an entrepreneur. I'm not an economist, And entrepreneurs are known to not have great patience, and be very optimistic or pessimistic. I liked your comments, I like your honesty. I was observing, how black gentlemen, they're very critical of government, and white panelists are very diplomatic, What you said, if they would say they might have been labeled as racist, they've been at risk, But it was beautiful discussion. Thank you. I get very frustrated about what's happening in government in South Africa. And there's so much potential in this country, It's such a great country. And this budget really, is it different? Question: is it different? Is it unique? Is it going to change anything, or is it the same chapter in the same story for the last 10, 15 years? Is it really going to change anything? Is it radical enough? Budget is expression of economic policy, isn't it? Of government. It's financial expression. When you look at company, how do you change company from being non-performing to performing? You get a CEO, you change the CEO. You fire CEO and board, And problem in this country is the leadership, I come from Croatia. Croatia fought a war against Yugoslavia. And what happened basically, all those freedom fighters, when they came in power, they ran the country to the ground, They became corrupt, and there's economic destruction, There's like financial, political freedom, but economic destruction. Same thing happened in South Africa with freedom movement. That happens in every country, unfortunately. And just took too long, I think, in South Africa, for some common sense to prevail. Now, South Africa has such amazing potential. I came to South Africa 35 years ago. And South Africa should be like leading, should be growing 6-7%, should be like a China of Asia, because South Africa is a gateway to Africa. Such a developed, infrastructure, financial services. It is a mining powerhouse. It was the greatest producer of gold, diamonds in the world. Such amazing potential. Tourism, amazing potential. Agriculture, such a beautiful climate, beautiful country. Greatest leader in the world, Nelson Mandela, born in this country. Most powerful, richest man in the world currently comes from South Africa, Elon Musk. Koos Becker, amazing success story of Naspers. Naspers, one of the largest technology companies in the world, again, from South Africa, process and investment, 10 cents and all that. So many beautiful stories, so much potential in this country, but the potential is just blocked, unfortunately. I asked myself, what would I do if I would be president, or if president would appoint me like Elon Musk, for a few months, I would probably also bring the chainsaw. And I would cut government pieces, I would slash these ministries, half, probably more than half, and I would bring investors, I would bring Elon Musk to South Africa, and I will stop affirmative action and all this, and I will bring Koos Becker from UK, from London, to South Africa, and all these companies that have left the country, I will bring them in, say, guys, let's build this country, let's build Africa, There's so much business to be in Africa, and South Africa really should, that's our greatest competitive advantage, But unfortunately in South Africa, we believe, we're isolated island, we're navel-gazing, we're internally focused, we forget that we're supposed to be competing, we're competing globally. And to be globally competitive, we have to be innovative, we have to be entrepreneurial. We have to learn from South Korea and Singapore, and invest in certain industries, properly, whatever it is, tourism, mining, financial services, agriculture, whatever it is, And there's so much potential, such a beautiful country, beautiful people, beautiful climate. Whole Africa, 1.4 billion people at our doorsteps, and so sad that potential is untapped, But only we can do is what we can do. We cannot change government, and we can do as individuals, we should try do our best and make contribution to this country. And we should just remind also that each one of us has potential, to build big business and to employ people, to create, opportunities, employment and job creation. At Genesis, we have grown despite of all these hardships, in the last 25 years, we've grown 100% last few years. We're employing 1,000 people now in 10 countries in Africa and India. And just reminded to each one of you, there is a potential in each one of us, to solve the problem, to just develop an app, and to become billionaire and to employ thousands of people, and to be the turning point, So let's look at what we can do as individuals, if each one of us, something good, will create maybe a positive ripple effect, and that energy, I think we need spiritual type of regeneration energy, because there's so much negativity and depression, pessimism, and business, nothing good comes out of it, So we take responsibility, each one of us, to create the positive energy and take risks, and be brave and do something good, and be a role model, There's a greatness and there's a genius in each one of us, That's the Regenesis slogan, So, again, from my side, thank you so much for your time. All the best. Thanks to you, audience. Thanks for coming. Let's contribute together to this beautiful dream of beautiful South Africa and beautiful Africa. All the best, and God bless all of you. Thank you.
And that, my dear friends, concludes our proceedings for today. Thank you for having me host this amazing discussion and for indulging me and the rest of our audience this morning. I really appreciate it. I'm Ropo Manzana, and it's been a pleasure.